Final accounts with adjustments. Final accounts with adjustments. Trial balance debit balances must be recorded either trading account debit side, either P&L account debit side, either balance sheet. This is the rule we have to remember. Next, what are the balances appear in trial balance credit side? These are record either trading account credit side or P&L account credit side, either balance sheet liability side. This formula must be remembered every time. Okay, next. Problem number 1. Okay. From the following trial balances, prepare final accounts of Satish Traders for the year ended 31st/3/2018. This is the problem. Okay, on the debit side we discuss first of all opening stock, debit in trading account, cash in hand asset side, cash at bank asset side, purchases trading account debit side, wages trading account debit side, returns debit means sales returns. It should be deduct from the sales in trading account credit side. Carriage inward, it is trading account debit side. Carriage outward means carriage on sales, it is P&L account debit side. Investment asset, patent assets, salary expenses, it is indirect expenses, so it is debit in P&L account. Next, legal expenses, it is also P&L account debit side. Insurance, P&L account debit side. Drawings, it must be deduct from the capital in balance sheet liability side. Debtors, these are the assets, balance sheet asset side. Discount debit means discount allowed, it is debit to P&L account. Printing and stationery, this is also expenses, debit to P&L account. Machinery is the asset, it must be in balance sheet asset side. Next, credit side, sales trading account credit. Returns, credit means purchase returns, it must be deduct from the purchases. Next, capital is the liability side. Creditors, it is also liability side. Discount and P&L account credit side. Remember one thing, any indirect expenses, any incomes in P&L account only. Direct expenses in trading account, indirect expenses in P&L account. Okay, come to the adjustments. Every adjustment must be effective twice. Closing stock, it is record in trading account credit side as well as in balance sheet. Outstanding stationery, it is also added to stationery in P&L account and liability side in balance sheet. Depreciation on machinery 10%. Machinery value is 6,000 at the rate of 10%, 600 rupees. It must be recorded in P&L account debit side first of all. Then the amount of depreciation deduct from the machinery in balance sheet asset side. Next, bad debts. Bad debts, it is a loss, so P&L account debit side, and the same amount must be deduct from the debtors in balance sheet and sundry debtors. Prepaid wages, these are the wages, and prepaid wages must be deduct from the wages in trading account debit side as well as these are amounts shown in the balance sheet asset side. This is about and first problem. Come to the one by one. Opening stock, this is the opening stock. Next, first you have to record and trading account related aspects, then after go to P&L account, then after go to balance sheet. This is the scenario we must remember and at the time of preparing final accounts. Okay, opening stock and purchases is there 11,000, Purchase returns on credit side 800 rupees. So 10,200 rupees. Next, wages 3,000 rupees. In adjustment, they are given prepaid wages. So prepaid 500 rupees deducted, 2,500 rupees. Next, carriage inward. This is a carriage inward. It must be recorded on the debit side of the trading account. Next, and no one is there, and all trading account debit side is related aspect is also recorded in the debit side. Come to the credit side. So we must see the in trial balance credit side only. This is a sales, and returns on debit side, it must be deduct from the sales returns 1000 rupees, we get 19,000 rupees. Closing stock is given in the adjustment below the trial balance. Closing stock 2100 rupees. This is about trading account. First total them 19,000, 2,100, 21,100 rupees, 21,100 rupees. What is the difference between, and these are the differences, this total amount and this total amount, we get the gross profit 6,400 rupees. Next, come to the P&L account related aspects. Salaries, there is no adjustment. Carriage outward and legal expenses. Next, insurance and discount. Printing and stationery is there 1,400 rupees. Outstanding 600, total amount 2,000 rupees. Depreciation on machinery 6,000 at the rate of 10%, 600 rupees, it is debited. This is the one. Bad debts, it is given in the adjustment, and 500 rupees, record this side. Next, come to this side. Gross profit, this is a gross profit transfer to the credit side. Discount in credit side is given, trial balance, it is also taken on credit side. Total amount 7,200 rupees, 7,200 rupees. What is the total amount of this one and this one? We get the 150 rupees, it is net profit. Net profit. Okay, this is the next. Come to the liability side. Creditors 4,250 rupees. Printing and stationery outstanding is there. This outstanding must be and record on liability side. So this is also record on the debit side. Capital, it is given in the trial balance credit side. And net profit, this is the net profit transfer to and capital account, means add to capital account net profit 150 rupees, 40,150 rupees. Drawings is given in the problem debit side. The drawings must be deducted from the 1,000 rupees. We get 39,150 rupees. Total amount is 44,000 rupees. Come to the balance sheet. Asset side. Cash in hand is given debit side. It must be recorded on that. Cash at bank is given on the debit side. It must be taken. Prepaid wages, it must be given in the adjustment. It is added to and trading account debit side as well as record in asset side. Debtors is 12,000 rupees less bad debts and 500 rupees we deduct. We get the 11,500 rupees. Closing stock 2,100 rupees. It is also given in the adjustment. It is record first trading account credit side, again in balance sheet asset side. Investments, it is also given in the trial balance, it is asset, it must be recorded on the asset side. Machinery 6,000 rupees less depreciation 600 rupees, we get 5,400 rupees. Patents 7,000 rupees, total amount is 44,000 assets, liabilities also 44,000. This is about, and after completion of this problem, verify each and every one adjustment in the, first of all, closing stock here recorded as well as here recorded. So cross verification. Next, outstanding prepaid wages is recorded here only. as well as record year only. So it is correct. Outstanding expenses record year only as well as record year only. So it is also correct. Depreciation amount is 600 rupees, record year only, deduct from the year only. Bad debts, this is record year as well as and deduct from the datas. So this way you have to verify each and every adjustment, then after total them each and every one. First trading account and find out the gross profit. Next P&L account, find out the net profit. Next balance sheet, total them. Finally we are get the answer, and assets is equal to liabilities. This way you have to solve the problem easy. And before that, what is explained in the videos, previous videos, and what are the adjustments is given in the adjustments is given, how to record in the trading account, how to record in the P&L account. It is explained everything in the adjustments. The adjustments must be and listen and twice or thrice or 4 times, whatever it may be, when you are get the clarity about adjustments, which adjustments is recorded in which account, which side, in each and everything will be known. And by listening and previous video, final accounts adjustments as well as trial balance information and format up and final accounts, we get the and solution easy of final accounts. This is about final accounts.